People often ask me, what is happening with home prices and when is it going to stabilize? Well, the answer is it's already stabilized. It really has. But we want it to go down. Like, the price of homes going down would be fantastic. Like, that'd be great. So, how's that going to happen? Is it going to happen? When's it going to happen? These are all the questions. So let's figure it out. Let's educate ourselves. I'm Sean Faulk. I am a realtor in the Orlando area, and I'm also a mortgage loan originator for Florida, but I have connections and can help you with pretty much any state that you're in. So definitely reach out. And if you're wondering, that is my dog Roy in the background. Should he raise his lazy head up at some point, don't be startled. That's who he is. And I'm even sitting to the side so that people can get a really good look at him because he's beautiful and wonderful and very calm right now. So I'm happy and I don't want to poke the bear. So home prices. Everyone's freaking out about mortgage rates right now. Interest rates, mortgage rates, Fed raised the rates. It is a big deal and it sucks, but the bigger problem, in my opinion, is the price of homes. Home prices have pretty much doubled in just the last couple of years, and that's a big problem. Interest rates have times by like 3, which I know sounds like a worse problem, but it's actually kind of stabilized back to where it was before the 2008 global recession. So throughout the 2000s, interest rates were around 6.3%, and this is according to Freddie Mac, which is a government program. I'll make another video at some point talking about him and Fannie Mae and what they're doing. So they track these numbers. So 6.3% was the average interest rate in the 2000s, and the average interest rate now in November 2022 is floating around 6.5%. It changes every day. So 6.5%, if you have a pretty good credit score and you're buying a primary residence, that's what you can bank on. So we're pretty close to the 2000s point. 1990s was 8.1% interest, so that's pretty high. And then in the 1980s, I wasn't even alive, but I'm glad I wasn't, because it was 12.7% interest, which is insane. Like, it's nuts. That's almost double what it is now, and everybody's freaking out at this point. Can you imagine if it went up double again? So, of course, the biggest factor is the home prices were cheaper. In the 1980s, the average house was just over $100,000. In the 90s, it was still in the upper 100,000s, and then in the 2000s, it went to around 250,000 to 285,000, depending on what market you were in. So now we're in the 400s. Like, we've like almost doubled that. So we've put in some work into raising home prices in the last few years. So, 2008, housing market crashes, all the markets crash, everything's in shambles. And a lot of it was because of the real estate market. There were predatory loans at that point. They literally were predatory. It is not, this is it is disputed, but it is a fact. I've done my classes in this. There were some messed up things going on then. And now the government has put in a lot more regulations into step-by-step procedures on what can happen in order to purchase a home, which is a good thing. So after that happened, imagine you are a construction company and you build homes, and you are realizing that pretty much everybody's like lost their job and no one has any money, and the stock market crashed and everyone's 401ks and their savings are just shot and all that. Are you going to ramp up home building? No, you are not. So they stopped building, kinda. A lot of them went out of business, actually, but so they pretty much stopped building houses. In the 1990s, there were over 11 million homes built. And in the 2000s, there were over 12 million homes built. Roy? Sorry about that. In the 1990s, there were about 11 million homes built, and in the 2000s, there were about 12 million homes built. So you'd think it would go up to, what, 13 million in the 2010s? No. From 2010 to 2019, there were 6.8 million houses built. So we almost cut in half compared to where we were. That is not good. At the same time, from 2010 to 2019, we had a net gain in this country of 10 million new people, whether that's children being born, immigrants moving from other places. We netted 10 million extra people. So now there's more people who need somewhere to live. Less houses built, more people need to live here. we're in a mess. Another factor was with the economy the way it was, a lot of people lost their homes, so they moved into like multi-family homes or like high rises, apartment buildings. So there was a lot more need for that. So actually you'll see within the last 10 years, there's a lot more of those types of buildings that were built compared to single family homes. And people do ask me all the time. They're like, Sean, I either want a new build or I want a home that was built less than 10 years ago because I just don't want the problems that a home over 10 years old might face. But if you're looking for a house in the last 10 years, you're really limiting the number of houses that are available to you because, of course, only like half the houses were even built compared to decades prior. So you're shooting yourself in the foot if you only want the 10 years. If you still want it, I can make it happen, but it really is limiting for you. So, what can be done at this point? We can't manifest new houses. We can't just come up with houses overnight. It takes weeks to go through permitting with the county. It takes months and months to actually build the house. So we're roughly 3 to 6 million houses short in the United States right now. And if you take into account what I said earlier, only 6.8 million were built in the last decade. So we would have to keep going at that rate, which would put us somewhere between 5 and 10 years behind on building homes, because those are the numbers, that's the statistics. So that's not going to fix itself for a while. So we need people to start selling their homes, but there just aren't enough homes with the demand, and we can't fix the problem. The other problem, which I think is the bigger problem that people don't really seem to be talking about very much, is the refinance problem. When you refinance your home, you take out a new loan, essentially. You either cancel out and pay off the other loan, or you're taking out a second loan like against your home with equity. And you can use that to buy something else, or you can just stay in your house and pay off the debt. Let's say your first one's with Chase Bank, you would pay that off, and now you're with Wells Fargo. Ugh. But if you're with them, then you can assume a new debt, but at a lower interest rate. So we get into this factor where people refinance. In 2020, 13.6 million homes were refinanced. There were only 6.8 million houses built last decade. So the fact that 13 million of them, that's over double the houses refinanced than what were built in the decade before. So now you're at a point where your interest rate is super low. So it's not even like, oh, all these new people bought houses and they ended up at like a 2 point whatever percent interest rate. All the refinance people, that's 13 million more people that got an interest rate at like 2 point something percent. How do you incentivize them to sell? That's very difficult to do. You would either have to be moving, or you would have to go into foreclosure or something like that to motivate someone to leave. And I'll use my home as an example. I bought my new house in December of 2021. I'm filming this in November 2022. So I'm 11 months in on my house. My house cost $780,000. I put $180,000 down, which means my loan was $600,000. My interest rate is 2.67%. So principal and interest, principal is the money that goes towards the $600,000 debt, and then interest is money that goes to the lender as a thank you for letting me borrow this money. My total is $2,424 per month. But right now, if I bought this house, let's say it hit the market for $780,000 and I wanted to buy it, I would be at a 6.3% interest because I'm a mortgage loan originator and I ran my own stuff. So I checked my stuff and I could buy this for 6.3% interest. Over 30 years, principal and interest would be $3,714 per month. So 11 months later, I could buy the same house that I already live in for $1,300 more per month. I wouldn't have done that because there's also insurance and taxes and other things on top of that. So I just wouldn't have bought this house, which means I wouldn't sell this house, because if I sold this house, I'd have to have somewhere else to go. So even to buy the same house would cost me $1,300 more per month. I can't upgrade. I can't afford to even move laterally to the same thing. I would have to downgrade. And most people just aren't going to do that. If I wanted to keep my same mortgage rate of $2,424 per month at the new 6.3% interest, I could only get a loan for $391,600. That's quite a bit lower than the $600,000 loan I got. And if we add 20% onto that, that means my purchasing power would be $469,920. And I can promise you for $470,000, you could not buy a house anywhere close to the location, size, or having a pool that my house is right now. So you would have to really go to some great lengths to motivate me to get out of my house. I'm pretty much going to own this house until I die. That's about it because I can't afford to sell it. And a lot of people are in that boat. I don't want to sell it, but like I couldn't afford to even if I wanted to. Because where would I move? With that being said, yes, some people could go into foreclosure. That's definitely a possibility. About 25% of those 13 million, they did take out their refinance to buy a second home. So they bought a vacation house or an investment property somewhere. Likely they could sell it and make money on it, or at least break even compared to going into foreclosure, which might trigger a bankruptcy for them, or it would just really damage their credit a lot. So they probably won't go into foreclosure. And all of those factors combined does make it where, hey, the people that are hitting the market, if you want to sell, there still is only a small pool of homes that hit the market. We're definitely down in numbers in what's actually being listed for sale. And I think we will be for a long time because, what can you do? So price points are probably here to stay. I do think they've stabilized, but I don't think they're going to drop significantly anytime soon. So the best plan right now, if you need to buy a house or if you just want to buy a house, is get in something, and we can use what's called a 2-1 buy down, and that is where you will get in the house, and there's a lot of ins and outs with it, and I'll make a whole other video talking about them, but they're a good option right now. So they can get you in the house, and then later, within a year or two, you can refinance at whatever the new interest rate is, hoping it's a lot lower, and you'll refinance into the lower interest rate, and you won't have to pay lender fees and all these other fees. There's some fees you have to pay, but it will be quite a bit cheaper for you to do that at that point. So it at least gets you in the house now, lets you start building some equity, lets you start doing what you need to do compared to rent prices, because rent is completely out of control. So if you contact me and you let me know, hey, this is what I got to pay in rent, we'll figure out what you can get into to get your monthly payment lower than at least what your rent is. So that is saving you money, building you equity, and we can try to get you a refi pretty soon, in the next year or two at least. And that's a good way to stay ahead of the curve, because at least later you could sell it, as long as we don't go upside down, which is a whole other thing. But I feel really good about the future eventually with this, especially with a 2-1 buy down. So it's a good program. Reach out to me if you're trying to repair your credit, or if you're a first-time home buyer, particularly long-term investment. That's a pretty good plan right now. So definitely reach out, Sean at realestateinorlando.com. I'd love to talk to you, and I will be helping you in the future.